Hey everyone, welcome to another episode of Investing Kev. In today's episode, I want to take a look at JD.com, ticker JD, and the released Q4 and fiscal year 2021 results. I also want to take a look at why Chinese stocks were hammered today and what my approach is through it all. I haven't spoken on Chinese stocks in quite some time, but have no fear. I've been doubling down and buying as much Chinese stocks as I can at these prices. I have numerous videos on why I'm staying calm and weathering through the storm, and I believe that all these stocks will take me to financial freedom someday. So if you're still holding and you're in a lot of pain seeing a red, you're not alone. It's not always going to be easy. If you sold out and decided to invest in something else, that's totally fine. This is your money and it's your financial goals, and I wish you the best of luck. This channel is growing, so please help me out by liking this video, subscribing, and letting me know in the comments what you think about Chinese stocks right now. Alright everyone, let's get started. I want to take a look at JD's financial and operational highlights. Looking at the left hand side, there is robust growth in Chinese retail. In 2012, the total retail market size in China was 21 trillion RMB. In 2021, that number is up to 44 trillion RMB. That is an 8.3% compound annual growth rate from 2012 to 2021. And looking at the right hand side, in 2021, China's online retail market size was 13.1 trillion RMB. From 2012 to 2021, they saw a 30% compound annual growth rate. Looking at their net revenues, in 2021, they had 951.6 billion RMB. In 2020, they're at 745.8 billion RMB. This is an increase of 27.6%. Looking at the 2021 Q4, they had 275.9 billion RMB. In 2020 Q4, they were at 224.3 million RMB. That is a year-over-year growth of 23%. Looking at their net revenues breakdown, their net product revenues continue to go up every single year. Their net service revenues continue to climb up as well. In 2021, their net product revenues were at 815.7 billion RMB. Their net service revenues were at 135.9 billion RMB. Within the past 5 years, they've seen a 28% compound annual growth rate in terms of net product revenues and a 46% compound annual growth rate in terms of net service revenues. One thing that stands out and I really like about JD is that we continue to see double-digit growth over and over again. And what I like about JD is that they have a diversified business and a wide spectrum of sectors. Looking at JD Retail, we saw 21% growth in Q4 of 2021 compared to 2020 Q4. Looking at JD Logistics, we saw a 28% increase from 2020 Q4 to 2021 Q4. And looking at their new businesses, we saw Jinghuan, JD Property, and JD Worldwide. They saw a 46% increase from 2020 Q4 to 2021 Q4. These are investments for long-term sustainable businesses. And I want to take a look at their supplemental financial information and business metrics. Looking at their annual active customer accounts, in Q4 2020, they had 472 million people. In Q4 2021, they had 570 million people. For them to compete against Alibaba, Pinduoduo, Taobao, and so many other e-commerce sites and still grow their base by 100 million people in a single year is crazy. Their free cash flow was at 34.9 billion RMB in 2020 Q4. In Q4 2021, it was down to 26.2 billion RMB. I'm not worried about this because JD is still growing. They're seeing opportunities domestically and internationally. As long as JD continues to grow their revenues, grow their users, continues to reinvest in itself, to defend their moat, that's what's most important to me. As of right now, JD has over 1,300 warehouses in China. This is over 24 million square meters. They currently have about 220,000 delivery personnel, and they currently have 43 projects in 33 cities. Their geographic coverage is almost all counties and districts in China. You have to remember that JD can deliver 90% of their packages within the same day or the next day. That is incredible numbers. Why do I like Chinese e-commerce companies so much? Well, this was back in September 2021 from Yahoo Finance. China's e-commerce is expected to top $3.3 trillion in 2025. Global data estimated that between 2021 to 2025, the size of the e-commerce market is expected to grow at a strong compound annual growth rate of 11.6%. This will reach 21.4 trillion RMB or $3.3 trillion in 2025. Between 2017 and 2021, e-commerce sales in China grew at a compound annual growth rate of 17.7% to reach 13.8 trillion RMB or $2.1 trillion in 2021. The Chinese e-commerce evolved rapidly during the last 5 years. This is supported by high internet and smartphone penetration, increasing consumer confidence in online shopping, emergence of e-commerce platforms, and the availability of various alternative payment solutions such as Alipay and WeChat Pay. Looking at their stock price, today they dropped $9.88, which is a 15.8% decrease. Their current price is $52.52. JD is the first ever Chinese stock I ever bought back in 2016. For me personally, this stock means a lot to me and I believe in its future. I believe in e-commerce and I believe that JD is going to be a winner long term. I believe that JD will help me reach financial freedom. Chinese stocks got hammered today, and that's because the SEC released 5 companies for possible delisting over auditing concerns. The SEC said that fast food giant Yum China, biotechnology groups Beijing, Zylab, and HUTCHMED, and technology company ACM Research faced delisting. The announcement triggered a sell-off in Chinese stocks that are traded in the US. The Holding Foreign Companies Accountable Act set a 3-year deadline for companies and their auditors to comply. The SEC's notice on Thursday begins the countdown for compliance for the 5 companies. China's securities regulator said on Thursday that it opposes the politicization of securities regulation by some forces, but added that it had been in communication with U.S. audit regulators to resolve the impasse over foreign access to Chinese companies' documents. We believe the two sides can reach an agreement that aligns with the law and regulation of both countries, that protects global investors, the regulator added. Michael Yee, analyst at Jefferies, said that the SEC's list was likely to lengthen as more companies published their annual returns and provided details about their accounting standards. And this is from CNBC. All the Chinese listed ADRs will likely end up on the list because none of them will be able to comply with requests to have their audits reviewed. This was said by Brendan Ahern, Chief Investment Officer at Crane Shares. This is because Chinese law prohibits the auditor to provide the review to U.S. regulatory authorities. He also noted that the SEC has not moved to delist any of these companies. He said SEC Chair Gary Gensler has said that the clock has started last year, so the earliest a company can be delisted would be 2024. Like I said earlier, I'm still in this for the long term. 3 years is a long time, and there's so much that can happen. I'm not worried about the news today because multiple times within the past year they've talked about trying to reach an agreement. Obviously, talk is just talk. Actions have to go through. There has to be an agreement. I'm taking that risk and believing things will be resolved because I believe it would be a massive blow to American investors to not have access to the second biggest economy in the world. I think it'd be a huge blow for China for their companies to not get the money to continue to expand their operations. We'll see in due time. I will either be really broke or I will be really rich and retired in my 30s. If you like this video, please give me a thumbs up, subscribe, and let me know in the comments what you think. As always, thank you for tuning in. Thank you for the love and support. Stay safe, and I'll see you all next time.